Hello traders and welcome to our new free video analysis. This time I want to talk about some basics of the Elliott wave principle because I just noticed that a lot of traders who are even familiar with the Elliott wave principle, they will be a lot of traders that will be forcing the wave counts, or they will look at some very tricky and unclear wave structures. Sometimes traders will focus on just one particular market, and even they will try to be forcing wave counts and try to find some opportunity there, even when the price action is very unclear and messy. But how I look at the Elliott wave principle is that it's very useful if you try to apply the wave count on the price action that is very clear. Because if there is something very complex and unclear, then in my opinion, it will also be very hard to find higher probability trade setup. So if you're new to Elliott wave principle, if you know the basics, if you know what is the five-wave movement, what is the impulse, if you know how the correction looks, then you just have to find this clear pattern on the chart with the clearest wave structure. So if, for example, I'm looking at the euro dollar and there's no clear wave count whatsoever, I will not be trading or forcing my trades on this market. I will try to skip this one and I will look and research further, maybe looking at some other currency pairs, maybe even some other assets or even cryptocurrencies, whatever. So the most important is that before you are trying to apply the wave count, that you look at the clear wave structure. Once you have a clear wave structure, you have a clear view of what may happen next. And then obviously you can be looking for potential trading idea. So last week, I basically posted this chart on Twitter. As you know, I share a lot of stuff there as well. And I said, how would you apply the wave count on this chart? Well, I got a lot of different answers, but for me, this looks like a textbook example. I didn't tell anyone which market this is. I will show this in a second. But what's the most important here is that we have the clear wave structure, in my opinion. We have here a free wave rise. Most important thing is that we had this very sharp reversal back to the previous wave B levels, meaning that this movement is most likely finished, confirmed by this impulse, because you're always looking for direction within the higher degree impulse. Okay, you want to trade in this direction. So what was interesting here last week is that we rallied in three waves. So I said, how would you level this wave count and where do you think the market would go? Well, basically, that's the chart here. It's basically dollar versus pound. Okay, so I actually reversed the axis here because I just didn't want to give impression that or someone to figure out which market this is. So basically, that's cable. If we now try to do the normal scale, so you can see now that this is inverse price right now. So last week I said, how would you put the wave count on this pair? And if we take a look right now, what happened later on, you can clearly see that there was a very nice and beautiful reaction to the upside right after I posted this chart on Twitter, and I somehow wanted to show community what we should focus on the clear wave structure. Now, if we try to apply the wave count here, well, in my opinion, that's an ABC drop. It's not always that you will see a clear ABC drop. Maybe someone will now get frustrated. Well, that was not a 5-wave drop for wave A. Well, okay, maybe you could label this as a WXY. But the most important thing is what has been happening when we were trading here. Before that, we had these 5 waves up, right? Followed by A, B, C movement. And so far we can see a very nice, rebound right after ABC drop, right after I posted this chart here. The market basically turned down because, as I said, it's the inverse chart because I didn't want anyone to figure out that that's cable. So basically we are seeing a very nice rebound here, and I've been covering cable also in our webinars. I said that we have a very beautiful pattern there that we should not overlook. Sometimes even textbook patterns like this will not work out, but the important is, as I said, that you focus on a clear wave structure where you can identify the wave pattern in just a few seconds. If that's something that you can do, that you can apply the wave count on the market that you're tracking, then maybe this one could be very interesting for potential consideration of your trading idea, investment, whatever, right? But as I said, not all of the textbook pattern will be 100% correct because it's nothing in the world is 100% correct. Even some clear wave structure will also be wrong. But if we will try to apply this clear wave structure this kind of approach, then I'm sure that you will be right 9, 8 times out of 10. Okay, so definitely that's where I see the opportunities on the markets when we try to apply the simple wave count on the clear wave structure. Now, if I have to do a bit more deeper analysis here, well, previously we also, when this market rebounded, we have seen 5 waves up out of this corrective channel, and now after these 3 waves down, we had another rebound in breaking the corrective channel, which now could act as a potential support. So I'm looking for more gains. Also, sometimes I look at basic technical analysis as well, not only Elliott waves, and you can see that this can be a very beautiful head and shoulders pattern here with the current price approaching the neckline. So if we can break the neckline, this will be another confirmation that we could see more upside. Of course, the targets for head and shoulders would be then quite significant here at new highs for 2025. But if I have to add maybe A to C target, because what if we are here just going to see ABC rally, okay, and we are in a higher degree ABC, so this is also very useful in my opinion. Then of course we should focus on minimum upside levels here around 138 actually. And why I think this is important, because that's also the previous resistance. So this level up there very important. Sometimes wave C will meet only the 61.8% here, which is here, but obviously because wave B was not that deep, I just think that we will most likely see even higher prices. So a lot of FIP tools here could certainly be very, very helpful. Maybe 138.2% is something to watch for, distance of wave B, or maybe even 161.8%. So I'm thinking that a cable has room for more upside, but as I said, if you were able to discover this pattern much earlier, because it was the clear wave structure, then I also think that you will be able to recognize opportunities much earlier, and not now when maybe some are already booking profits when we are already at some 1.36 resistance. But I think that if we see a daily close above that level, there could be more upside into the third leg of recovery. Can be wave C, can be even wave 3. But the important is that you try to focus on the near-term resistance levels, not some kind of resistance levels that are far away, because these near-term resistance levels will help you to make more proper risk-reward trade setups. But if the move will extend, well, that's even better than for your potential game plan. Traders, thank you very much for your attention. I hope that you enjoyed this presentation. Please press a like, leave me some comments below this video so that we will try to grow on YouTube. Or if you're interested in more analysis, visit us at wavetraders.com. We are covering these markets and a lot of more on a daily basis. And hopefully I will see you in our webinar on Monday at 15 Central European Time. Traders, have a nice day. Bye.